Hello traders, this is Rich from Tradesight. This is an update of the long-term technical outlook for Tesla. We talked about this a couple of weeks ago when the stock was approaching 160. At that time we had said that this is definitely not a time to be putting long-term money into Tesla, really just to be working on the long side scalping. We expected that our Seeker tool would produce a reversal warning, which we're getting this week. We're now 13 weeks up. You can see the red candle 1 here, all the way up to 13 up here. Now we have this red arrow above 13. This is going to lock in that exhaustion warning. So now's the time when we're expecting either some kind of a lateral consolidation move or some kind of a full-fledged reversal. That remains to be seen, and it's really not knowable right now as to which path we're going to choose here. We'll just have to wait to see how this develops, and the next candle is going to be very, very important to see what kind of bullets the bulls still have in their arsenal for the Tesla shares. Now, if we start to roll back to the downside, I want to look at a couple of key levels. So I'm just going to activate the Fibonacci series here. What I'm going to do is I'm going to paint this to the high water mark of the move so far up here. Now I'm going to span it down to the origin of the Seeker run right here. So now we've got our fibs in place. Here's our upper anchor is the high water mark of the move. The lower anchor is going to be the low of this 1 bar, the 1 through 9 setup phase of the Seeker, which kind of originated all the construction here to the upside. So key levels are going to be this 138.5 area, 139. That's going to be your first retracement. Then the biggie is going to be the 62% fib coming in at about 120. And what I like about these fibs is you can see once you snap your fibs onto a chart, I always want to see that the chart is interacting with them, and it looks like they have some meaning. So certainly here, this was this big push here. We had a gap up to start this weekly candle. We came down to use this area for support. So I like the way the 75% fib looks, and also the 62% fib was resistance here initially, and then it was key support here for these 3 weeks. Even we had this big tail down here that was absorbed, so this was definitely in play. So the first level is going to be the 75% fib, then the 62% fib is going to be very, very important to the overall pattern. Another thing to consider are going to be the Murrey math levels. So let me switch the slide here and put up the chart with the Murrey math levels on it. Alright, here's the chart with the Murrey math levels on it. This is when we did our first video a couple weeks ago. We were approximately in this area. We thought that we'd probably ultimately push up here and put this 2-ace level into play here at $175. And certainly they've gotten up near that, but that is key resistance. In the Murrey math box, the key levels are the 0-ace, the 4-ace, the 8-ace, and then when you break above the 8-ace, the plus 2-ace level becomes very, very important and strong resistance. So for now, in addition to the Fibonacci levels that we had noted, we're also going to find this 8-ace level should be pretty important and pretty prevalent. I would think that if we do start to trade laterally here and just start to consolidate sideways, I think this 150 area is going to be key support. If we do start to roll to the downside, then we're going to look for the harmonic move, which was we went approximately 2-ace above the 8-ace level. We would look for 2-ace below it. So this 125 area at 6-ace level, if we do actually start to retrace to the downside on more of a reversal rather than a lateral consolidation, then that 125 level is going to be real important to the bulls. And also an important trade to target for the shorts working on the short side. So keep in mind we don't have a reversal just yet. We'll get a reversal if we close below the low of our 13 candle, which is here, or if we close and follow through below the 10 EMA, which is on this chart, this line right here. So keep that in mind going forward. Again, this is going to be something where we're going to be changing up strategies here. We're moving away from scalping on the long side, looking for short setups to scalp to the downside here now that we have our 13 exhaustion in place on this weekly chart. Alright folks, well as always, thanks for listening. This has been Rich for Tradesight.